just using Bitcoin as a proxy, would mean Bitcoin could be worth over $10 million per Bitcoin in that 20-year period.
Hey, what's up, guys? Bitcoin finally broke sentimental $10,000 price point, but not for too long. Despite the short-term volatility, it has a huge upside potential. In this video, a notorious Bitcoin bull, Thomas Lee, will explain how Bitcoin can reach up to $10 million per coin. If you would invest $1,000 around 20 years ago or at IPO price into FANG stocks, now you would have over $1.5 million. Well, you may probably ask, what is FANG? FANG stands for Facebook, Amazon, Apple, Netflix, and Google Alphabet. The oldest company out of the FANG is of course Apple, which went public in 1980, and the youngest company in FANG is Facebook, which went public just 8 years ago in 2012. A number of different investors may argue that the train is missed. You cannot make 1000x on your money anywhere anymore. This was one-in-a-lifetime opportunity which will no longer exist. Well, I can guarantee you one thing, that you won't make 1000x return on your money in FANG because it's just probably too late. FANG overall is just too mature to continue to grow exponentially. Facebook is the youngest one and it might have more juice left compared to other FANG companies in this category, but of course it won't be a 1000x. Another thing that investors are completely ignoring is that in 1980s, the biggest consumers during those times were the main force behind those driver consumer stocks such as Walmart, Home Depot, and Hasbro. At the beginning of 1980s, those were the stocks that mimicked the FANG stocks in 2000s. If you would invest in Walmart at IPO price in 1980s, when one share was around 12 cents, 20 years later in 2000s, the same one share was trading at around $60. That's a 500x return on your investment. $1,000 invested at IPO price turns into the staggering $500,000 20 years later. Or let's take a look at Home Depot, which went public in 1981. One share was trading at around 3 cents a share. 20 years later, in 2000s, the same one share was at around $60. A return on your investment is much better than Walmart. That would be approximately 2000x ROI. Initial $1,000 investment would turn into $2 million 20 years later. Those companies continue to perform well, but the maturity reaches its peak. Well, what is now? Where is the next potential opportunity for 1000x bagger? According to Thomas Lee, the potential 1000x return on your investment is going to be in crypto. The next generation of FANG stocks, it is cryptocurrency. Cryptocurrency is still in early stages. We know that Bitcoin was created more than 10 years ago. Aren't we halfway there? Well, not really. And here is why. Even though Bitcoin was the best performing asset class for the past decade, in 2010, only few people heard about Bitcoin and it was trading at around 6 cents a coin. Now, 10 years later, it's close to $10,000 a coin. It dwarfs the FANG stocks, Walmart, and Home Depot return altogether. From 6 cents to $10,000, that's a 166,666 times return on your investment. $1,000 investment would turn into $166 million. I know practically it was almost impossible to buy $1,000 worth of Bitcoin in 2010, but theoretically the return speaks for itself. Well, good for you. You are a very lucky individual if you are watching this video, because we are still in early stages, and especially altcoins. Ethereum, as the second most valuable cryptocurrency at coinmarketcap.com, was founded only 5 years ago. There are less than 50 million active blockchain wallets in the world. Well, you may say that 50 million is a lot of users. I would argue that those 50 million is not really users but just a number of wallets. One person can have large number of wallets. Personally, I have more than 10 wallets, so the realistic number of users could be less than 10 millions. But let's take a look at this. There are over 300 million registered PayPal accounts, and those are individual accounts. One person cannot have 10 accounts. There are 4.6 billion Visa and MasterCard accounts, and they continue to grow. You may argue that blockchain wallets don't necessarily cause the cryptocurrency asset to rise. And I would say that it could be true over the short period of time. But if you look at this long term, 10 years to 20 years, number of blockchain wallets grow logarithmically, just like Bitcoin's price, for example. In 10 years, we might see blockchain wallets addresses in billions, while Bitcoin price can be in millions. If a single Bitcoin won't reach millions of dollars per BTC, I strongly believe that the entire cryptocurrency space will be a multi-trillion dollars industry. Probably, top 10 cryptocurrencies will be worth 95% of the entire cryptocurrency market. I would like to give a shout out to Energy for supporting and sponsoring this video. Energy is about to soon set itself apart from the rest of cryptocurrency space through the blockchain migration to becoming Energy 3.0. Currently, Energy takes exactly 100th place at the coinmarketcap.com, with a total market capitalization of close to $50 million, and one coin trading is around $2 a coin. Energy was originally a hard fork from Dash with many upgrade features. Those features include a self-funded treasury that sees Energy allocation 40% of its monthly mined coins to fund its treasury, which funds projects through the centralized governance mechanism. Another very cool feature about Energy that you can actually stake Energy coins and earn rewards. Current reward rate is 15% annually, but this is not all. You can also become a masternode validator. Masternode validators earn additional 45 to 55% ROI annually, which is widely surpasses popular altcoins such as Zcoin and Dash. Required coins for Masternode is 10,000 NRG. So what is Energy 3.0? Energy 3.0 is a transition to smart contract platform with the majority coin migration that's set to happen by the end of this month. This evolution will foster mainstream adoption via the smart contract compatible protocols similar to Ethereum but with various superior features. Energy 3.0 integration with Ethereum-based decentralized application are going to be compatible with Energy platform and Energy coins that can be used within them. This means Energy users will get all the advantages of Ether and Ethereum network while also benefiting from the centralized governance and defense model Energy has. Now let's take a closer look what exactly Thomas Lee had to say about Bitcoin price forecast and cryptocurrency overall.
I might even argue that the only thing that explains any boom anywhere in the world is simply a demographic story. Japan's underperformance has been because of an aging population. China's boom was simply a rural to urban population shift. But I also would tell you that if you looked at the US markets, just using demographics alone, you could have predicted every bear market in the United States within 1 to 2 years with a 40-year lead time. So think about that. A single metric, which is population, explained every bear market in the US with a 40-year advanced lead time. And let me show you how this works. These are the 6 living generations in the US. The oldest is the greatest generation, and then it's roughly 20-year intervals. The silent generation, they're the children born during the Great Depression. The baby boomers, which were children of those silent generation. Generation X, which is my generation. And then we have millennials. On the right, I actually list the year that each of those populations peaked. Okay? Greatest generation peaked in 1930 at around the average age of 39. Silent generation peaked in 74 at the age of roughly 40. The boomers peaked in 99. And Gen X is peaking this year. Well, let's put that on a chart. That's the stock market since 1871. and I've shaded each of the peaks of the generation. What do you see there? Every peak of the generation has actually been the peak of the stock market. You've had complete transparency to predict every bull market and bear market just looking at population alone. And the point of this is that the millennials don't peak till 2038. And I think that's the only generation that's going to matter for anybody in this room. Okay, so there's 2.5 billion millennials globally. It's 43% of the adult population. And 2018 is the year that there are now more millennials that are producing income than living at home. So this is why the crossover is happening today. Now, we've done some consulting work for some companies, and this is one of the outputs of our study. But we show that in the next 10 years, in the United States alone, 90% of all purchases of financial products are going to be decided by a millennial. So the single industry that's going to change the most in the next decade is going to be financial services driven by a single generation. And you can see part of that has to do with the income share, that millennials are actually doing quite well today, but within a decade they're going to control the largest wallet in the US. And it's already happening. This is Chase credit card data, and this is showing you year-over-year change. The only customer segment at Chase that's consistently growing their credit card spending are the millennials. Okay, but what do we know about the millennials? Number one, this is a Facebook study. 92% of millennials don't trust banks. First Data did their own study. 71% of millennials would rather go to the dentist than listen to what a bank says. And actually 33% believe that they won't even need a bank in 5 years. Why do millennials hate the banks? Remember, the millennials were teenagers during the financial crisis, and in the US, 20 million households lost their home to a bank. Globally, of course, we had the same housing crisis. Millennials only remember that banks took their houses. Okay, and of course now millennials don't really even go to a bank. 68% of millennials do their banking primarily on a mobile phone. I mean, it's an app. Today, to them, Chase is just an app on their phone. And they're going to control roughly, according to First Data, roughly $7 trillion of assets by 2020. So again, this is just US data, but these are huge, huge numbers. And I think Asia is really important to watch because the adoption rate in crypto is much higher. 14% of Japanese males own a cryptocurrency, and 23% of Korean adults, 20-year-olds, are active in the cryptocurrency market. This doesn't surprise me. Japan and Korea were the first with mobile adoption, multiplayer gaming, high-speed internet. A lot of the technological trends actually are driven out of Asia. And I'm going to skip a few charts here in the interest of time. But let me just highlight gold, because let's say that gold doesn't really mean much to a lot of people. I mean, I know people buy gold as investments, and I think in Asia it's still very popular for jewelry. But there was really only one generation that bought gold in size, which is the silent generation. What I've done here is, on the bottom chart, I've listed the number of people aged 35 to 60 by generation. And that dark red line is the silent generation. Remember, these were children born during the Great Depression. Well, when the dollar went off the gold standard in 1971, the silent generation bought gold like crazy, and it drove a 15x gain in gold in a 10-year period. That was the only time gold's actually ever performed that strongly. And again, it's because of a single generation. I think the same thing's going to happen with millennials and crypto. But let me explain why. If you had to say what was the biggest trade to have made in the last 20 years, it was FANG, or in Asia it was BAT. FANG is the 4 stocks: Facebook, Amazon, Netflix, Google. $1,000 invested in FANG, starting with Amazon, turned into $1.5 million in 20 years. Okay? But here's the surprise. 70% of that return was just explained by the growth of the global internet. If you had taken each of these 4 stocks at their IPO and not modeled their company at all, but you just said, I have a projection of how many internet users are going to grow over the next 20 years, you would have gotten 70% of the return correct on these stocks. It's all about the macro, right? The tactical. And we've argued this with our clients, our institutional, that 70% of all return in equities is a tactical decision. Well, you might say, well, that's once in a lifetime. It's not true. In the 1980s, the boomers became the biggest consumers, right? Because it was a huge generation. And so I'm showing you this chart that in the 80s, consumer spending in the US tripled in a decade. Never saw that before in any period. And that tripling allowed consumer stocks, the 7 biggest, okay, this is Walmart, Home Depot, Hasbro, Gap Limited Brands, Dillard's, to turn $1,000 into $1.2 million in that 12-year period, sorry, in that 20-year period. The FANG stocks of the 80s were the consumer stocks. Every generation creates another FANG. And again, I think the next big FANG is within fintech, whether it's Square, probably Bitcoin. That's really the opportunity of the generation. And let me explain why again. Crypto, I think, is still in the earliest days. There's only 50 million crypto wallets, active ones, at best. I mean, that's an aggressive estimate. But there's 227 million PayPal accounts, and there's 4.6 billion Visa and MasterCard accounts. If you use social network value, which we did with FANG, a 50 million going to a 4.6 billion wallet, just using Bitcoin as a proxy, would mean Bitcoin could be worth over $10 million per Bitcoin in that 20-year period. So again, this is the big opportunity, right? Just focus on the number of wallets. And I think wallets growth is both a function of millennial adoption and the fact that Bitcoin and crypto digital assets are becoming an asset class by itself. The first is, and as I mentioned, only 4% of the market is institutional compared to 40 to 80% in other markets. But we now have some solutions coming. Backed is the most visible. That's backed by ICE. We've got companies like Microsoft and Starbucks participating. Eras, which is TD Ameritrade, and Fidelity is getting into this market. So I think these are things that are going to draw real fiat inflows, but a different type of investor that's going to tend to be longer term and potentially counter-cyclical. But this chart didn't come out quite right, but I can explain to you what's going on here. The one thing that's going to keep institutions on the sideline is they're going to be watching Bitcoin's price to its 200-day moving average. Institutions typically like price momentum to confirm their decision. And I'm just showing here, since inception, Bitcoin, when it's above its 200-day, has a forward return of roughly 190% every 6 months. And it's got a win ratio or daily positive returns 80% of the time. When Bitcoin's below its 200-day moving average, which is where it is today, because the 200-day moving average is around 7,000, Bitcoin only produces 18% gains every 6 months and only is positive 43% of the time. Institutions aren't going to just come into the market just because backed launches. They're waiting for Bitcoin to recover to its 200-day. And I think that's the opportunity for everybody in this room. Unless you think crypto is completely broken, we have a price correction taking place that has caused the price to fall even below its 200-day. But if you've got a time horizon that's not 3 months, 1 year, but 2, 3 years, this is a golden time to be long crypto. And again, as soon as Bitcoin crosses above its 200-day, we know that there's going to be a flood of money coming. And one thing I'll emphasize again, if you look at Bitcoin since 2013, its entire return comes from just 10 days every year. The dark blue line shows you the average return of Bitcoin every year if you subtract out the 10 best days. In the past 5 years, Bitcoin has had a negative 25% a year return, excluding the 10 best days. And of course, as you can see, including the 10 best days, Bitcoin's been spectacular.
Let me know what you guys think about Bitcoin's $10 million price forecast. Leave your thoughts in the comment section below, hit that like button and subscribe.